G'day, Adam Grocke from Johnston Grocke here with Anthony Clatt and Andrew Brown, both directors of Johnston Grocke. We're providing you with a weekly update. So I'll throw to Anthony Clatt straight away, one of our senior financial planners and directors of the business. Anthony, what have you seen this week happening in your neck of the woods?
First of all, before I get into that, happy Easter for everybody, which is coming up over the next couple of days. Have a great break. I know it'll be different to other years, but yeah, have a good time, a great break over Easter. The markets this week, Adam, look, it's a pretty similar story than what we've seen in the last few weeks, really. Predominantly, we've seen in the last sort of week or so, markets sort of jumping up, jumping down, either intraday or overnight, but being a little bit positive, if you like, over the last week or so. So we've actually seen markets start to improve over the last, say, week or so. I think the message is to be a little bit cautious on that. Markets are still being volatile and they can fall back. So just be a little bit cautious, but the positive news is the last week or so, we've seen markets rise, which is good.
Fantastic. And thank you, Anthony. Thanks for that. Any advice to people that may have changed over the last couple of weeks, or is it still the same advice that you're telling clients that are in the market?
Yeah, the advice is still the same, realistically. If you're looking to actually invest, I'd be doing that in stages. I wouldn't be jumping into the market immediately. So I'd be averaging in over time. If you are already invested, then it's a matter of sitting tight and waiting to see what comes at the end of this stage. Just a couple of things, if I can go on, a couple of strategic things as well that are happening out there at the moment that we've spoken about in other videos. One is the ability for people to actually reduce their allocated pension payments if they're retirees and reduce that by half, which is a good strategy if people are sitting on a reasonable level of cash outside of their pension funds, so keeping it in the tax-free environment by reducing their pension payments. And the other one, of course, is the one around the ability for people to access some superannuation, both this financial year and next financial year, being that $10,000 that the government's announced. Just a little bit of a warning with that. The ATO are looking to be diligent in actually making sure that people are using that for the right purposes. I know there's been a little bit of commentary around withdrawing that and putting that back into super. So yeah, just be cautious as to how you're using that.
Yeah, so it's interesting in the market at the moment because in terms of home loans, what we're seeing some really cheap rates out there, and fixed rates are actually lower than variable rates, which suggests there may be some more downward movement. I don't think the RBA is going to reduce interest rates any lower than 0.25% at the moment. They have expressed that they don't want to be taking rates to zero or negative. So that's really interesting to see that they've now got that stance. What we're also seeing is there's a lot of activity with people refinancing. So if you've still got your job, if you've still got income and you're in a sound position, people are refinancing at the moment to save upwards of 1% on their interest rate. So we're talking $3,000, $4,000, $5,000 a year savings just from moving from one lender to another. And we also have lenders that are offering a $4,000 cash back. So there's a really good incentive at the moment to go put your interest rate to the market, put your loan to the market, and we're doing that for a lot of clients and we're getting some great success. So that's a fantastic opportunity and a positive that's come out of everything that's happening at the moment. Is there's some cheap money for people to refinance to if they're willing to pick up their loan and move it to another lender. We have seen the banks come out for business loans and they've put in place a 100 basis point reduction, so a 1% reduction on interest rates. And we are still stressing to clients, look, if you are struggling because of COVID-19, you can go out and put a repayment holiday in place on your loan. So the interest will be capitalised to your loan and repaid over the remainder of your loan term, but you won't have to make repayments for the next 3 to 6 months, depending on your lender. Go to your lender directly to request that. It won't have a negative impact on borrowing post COVID-19. So I want to stress that. So if you are doing financial hardship at the moment, that won't limit your borrowing capacity in the future. ASIC has come out quite strongly and said anything that happens during this time will essentially be forgotten for assessment moving forward. So if anything does happen and you've got to put your loan repayment on pause and request that loan repayment holiday, that's absolutely fine. It won't have the negative impact. So do put your hand up. It'll help you get through this time, and it's one of the key things you can cut out to increase your cash flow. Thank you.
Just a little bit update on the business scene. Obviously, the JobKeeper Legislation's gone through with Parliament last night. Looks like with no amendments, despite a bit of angst from some parties, but it's gone through in its totality. People know generally how that's working at the moment, but now they've got the ability to register and actually implement it. So if you need help with that, just give us a yell. There's a little bit of fine detail or bespokeness around getting that right for people, and understanding who's eligible or not. There's some common questions that people aren't, so please shoot them through, and we'll come back to you as soon as possible. The other thing that's cropped up is the announcement by the Prime Minister about making mandatory the businesses that are eligible for JobKeeper to get some rent relief between landlord and tenant. So I don't know what it looks like yet, but what he's mentioned or touted is that there's a reduction in the rent of 50%, and that's obviously to give some relief to the tenant, but not totally make it so the landlord's disadvantaged as well. So we need to see what that's going to look like in the next, I guess, month. I suspect it'll be backdated, as the JobKeeper thing has in essence been, but we'll see what that looks like over there. And that's really the most important thing that's happened over the last week, is the commercial side of things for tenancies. Apart from that, people are just getting prepared to lodge things and to understand their cash flow a bit better. I think April will be the month where things are put in place, a little bit of uncertainty till the cash flow starts to come out in 1st of May or just after that. So April is a little bit of a holding pattern month, I think. So hopefully you don't panic and just come to us with any queries as you can, and we'll go from there. That's it from me this week. I hope people have a really safe Easter and take, like Anthony said, have a bit of a break and come back refreshed next week.